You are about to find out the key levels for AMC Entertainment, ticker AMC. So to get straight into it, firstly, obviously we had that massive move Friday after hours. Now again, we made a whole video about this. It's good news, but it's bad news. So just quickly run through what this is and we'll go over the key levels. So a judge rejected their offers to basically turn APE shares back into common shares. Now this is key because what this means is it basically stops dilution of the shareholders. So that's why you popped off this news, because again, you're reducing the amount of dilution for shareholders, which is a good thing. But firstly, there's two things to note with this news. Firstly, the company was trying to do it. AMC was trying to do this to the shareholders in the first place. So it doesn't make sense when the company's trying to harm its shareholders. Why you want to be holding this? Why you want to be long biased? To me, that bit doesn't make sense. The second bit as well is, since being rejected, we've heard, I think it was their CEO who said it, is they're going to try and find a workaround. They're going to try and reject or appeal to that court decision. So again, if this goes through, that's going to be bad for the shareholders. You're going to see it fall, and you're going to see it fall lower than where we were before. And that's why on this release, you're seeing us, we're not up much anymore. We're up 100%, now we're up 20%. We're selling off all this because investors are starting to realize this isn't even great news. It's good news in the short term, but overall, still bad for the shareholders overall. So I wanted to go through that first. Now to go over the key levels. So the ones we hear, again, on this initial release, we had 535. This is our first deviation on the 6 month. Then at 635 to 644, you have the second deviation on the 6 month, the first deviation on the 1 year, and our final level at 735, which is our third deviation on the 6 month. All four of these were hit on that initial release. Obviously, we break through these. That's why we don't trade the initial news release. Now, once we start to come down, we pull back, we test this level, we hold it, we get that bounce. Now, again, trading any part of this is quite risky. We actually did trade that bounce. We took a small trade on that, lost that one, re-entered here, got that lovely bounce. But trading that initial release until you start to see a relatively strong pullback, I would never trade the initial release on technical levels because, again, it's just added risk. But now opening today, obviously, we closed there, we started to push up, we retested this 735, didn't catch this pre-market again so early, plus it's super pre-market, don't really want to be trading that anyway, but retested our third deviation, and obviously this did cause another sell-off because, again, these are standard deviation levels. At the third one, which that one is, 99.7% of data should trade below that value. Again, in the stock market, nothing's that accurate, but it does give you a good sign. If you do quickly trade above it, that's probably going to be short-lived and you will start trading back below it relatively quickly. So when we retested this, we sold off again, to be expected. So as of right now, the key levels we have, and we're actually broken all of them as of right now. The only resistance we have, or the closest resistance we have, is 538. So that's what we're watching for now, because again, from the intraday perspective, you can see these top two right are the AMC charts. We're basically bounced off. This was a day trade we got on the live stream. We came into this anchored VWAP, we bounced as to be expected, but now what we're waiting for is a test of this deviation level, and if we can test this today, we'll see how it reacts, but could lead to a sell-off, break the anchored VWAP, and then again, then there's really no supports in sign, and it wouldn't be unlikely to start seeing us fill that gap. So that's what I'm looking at on AMC, really to retest this resistance, and then we could quite easily continue down. But if for any reason we do continue up, we do have more resistances. That's going to be 635, 644, then we have 735. Again, all of these were hit on the initial release, but they are still valid resistances if we start to continue higher. Now, if we do break higher, the two levels we haven't yet hit is 1065 and 1485. I don't really see us hitting these levels just because, again, the news wasn't great. So I do think it would be hard to get pushed to these levels. I think it would require some sort of a short squeeze. So if we do get there, they're short bias levels I'm paying attention to. Obviously, AMC has options, so we can define that risk. We would never trade a move like this naked, but, even if we're short in the shares, we're buying calls to define that risk, or we can play some sort of vertical spreads, or just outright puts to play against those moves if we do get up there. So again, that's what I am paying attention to basically on these key levels. So as of right now, again, we are, actually you can see as we're recording this video, we're testing this 538, starting to get a bit of a pullback. We'll see how this overall reacts, but if we can't break and hold this, again, looking to the downside, $5 will be our anchored VWAP. So as long as we can break that, we should continue down, and again, a gap fill wouldn't be unlikely, so pushing us down to the low fours. could definitely be a good and strong possibility.
I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.